Okay, hi everyone. We shall begin our session today. I'm calling it the Neuroscience of Wiring a Comeback. This is Wai-Yee Chen here. I'm calling in from Sydney. It's nighttime today for me. It looks like today's topic, wiring for a comeback, bouncing back, seems to be an apt topic, particularly for today, after what's been happening globally in financial market. But no matter whether you're impacted financially or not, but there's one area I think most people are, and that will be emotionally. Tonight, even on the media in the news, it's all over the news, evening news. $60 billion worth of prizes wiped out from our equities market. So there's no escaping from what's happening in the current market. So bouncing back, having a comeback, it's definitely key for all of us right now at this moment. So before we begin, the normal disclaimer, this is just general information, not advice. You need to seek your own professional advice, be it medical or trading. Okay, so let's begin. The secret to bouncing back, what do you think it is? It's there's one word for it, and that's emotions. I'm going to divide it into four things today under the secret of bouncing back. The first is the state of our emotions. Second is the cycle of emotions. The third is short-circuiting this cycle. And then the fourth is strategies for bouncing back. How do we actually have this comeback? Now, let's have a look at the first one, state of our emotions. Now, we know there are two kinds of emotions in general terms. That's the positive ones and the negative ones. So we want to have more of the positive emotionality rather than the negative emotionality. But both of them exist, and we are affected by either one or both of them at different points in time. Now, we must have experienced too what positive emotions can do to us. It can drive us to extraordinary efforts or strength that seem effortless at that point in time, to extra bravery to the point of saving lives. I guess we've all read or heard of news where family members like spouse or husband lifting up a car to save the spouse pinned underneath a car in an accident, for example. Extraordinary efforts, extraordinary strength that comes from the boost of emotions, passions, and love in life. Performance in work as well. Often when one were to go for recruitment or an interview for a job, it will be passion that people are looking for, that something that will drive you above and beyond what you're required. The same with investing. You need that positive emotionality, that optimism that keeps you in the trade, keeps you being positive and continue to trade. So those are the positive emotionality that we're used to. Now, what about negative emotions? Now, these are the types of emotions that we all go through that at one point in time or other that can derail the best laid plans. You may have thought out your plan from A to Z. Cognitively, they work. On paper, they work, but when negative emotions take over, they can derail the best laid plans and can take you spiral down a cycle. So the state of your emotions can either enhance your performance or send you down a spiral. So it's very important for us to be aware of the state of our emotions. Second thing is emotions has cycles to it. We're familiar with price cycles. For example, in charts, we look at it. Some of you may be looking at charts, support level, resistance level, trends, short-term trends, term trends. So we're familiar with price charts. So it may be as well with economic and market cycles. For example, we're in a growth cycle or a recession cycle, inflation, deflation. So we're used to cycles. But do you know that emotions go through cycles as well? look at this on the slide here. You see that in a shock, that's when the start of the cycle, and then we have the denial, anger, bargaining, down to depression, and then acceptance, and hopefully happiness from there. This is a cycle that stock prices go through, many kinds of sell-off goes through, and so it is in emotions. This cycle or this model was developed by two psychologists called Kubler and Ross. So it's called the Kubler and Ross model. It's widely adapted, not just in the medical area, but also in the change management area, in the corporate culture. Now, they said, Kubler and Ross, the two psychologists who developed this model based on terminally ill patients, they said that when something happens to the patients which is out of their control, they can get spiral down this cycle of emotions. Now, there are three things that can cause this similar cycle of emotions to happen to us. Firstly is something that happens to us which is out of our control. For example, what happens in equities market, bond market, or FX market, or whatever market that you trade in. It feels that it happened to you, it takes you out of control, and your survival instincts is at stake. Your survival is at stake, and hence your survival instincts are enhanced. So you are in shock because something that's out of control happens to you. Or a crime can be committed towards you and you feel violated. For example, a cyber crime or credit card forged or stolen, or your signature is forged, and hence you lose a sum of money. You can be in shock because of that. Or the third thing might cause you to be in shock is, for example, things that are imposed on you. For example, in a corporate culture, change of management, retrenchment, change in career, and things like that. Things that are imposed on you, and you feel a lack of control, and your survival is at stake. So those are the three things that can cause you to be in shock. Things that happen to you that are totally unexpected, crime committed against you and you feel violated, or things that are imposed upon you and you've got no power against it. Now, once we're in this shock kind of cycle, it's said that we can go down to denial, and we'll debate with ourselves, this can't be happening to me. I'm at the top of my profession, how can I be retrenched? Or, how can this person forge my signature? I trusted them so much. And then we go through this area where we bargain and we're angry with what happens to us, or we might even descend to this place where we lose faith. We lose faith in self or humanity, or we've lost money, and we feel like it's final. There's a sense of finality to it. Sometimes we feel that way as well with financial losses, trading losses. We feel that it's final. There's a sense of finality to it, and that causes depression. But according to Kubler and Ross, we can be dragged down when we have this shock to our emotions. We get dragged down to this cycle, and we have this loss of faith before, and this deep sense of loss and sadness and depression before we can actually go through the acceptance stage. But what we're saying tonight is that don't even go through that cycle. If you can short-circuit this whole area, why don't we do that? Don't even descend to there. Cut short it while you're still at the shock area, and bring yourself back to that level where you can accept and go through and trade again, and have that happiness cycle. So we need to short-circuit this shock that we can experience in trading. Now, how do we do that? The first strategy that we need to embark on is recognition. So we need to recognize that when we're in shock, really, we are in a state of emotion which is fragile. We are in a state of emotion that we need to be aware of. Now, there's positive emotion and negative emotion. When we're in shock, we're basically descend down to the negative emotionality. We're in this space where emotionally we're fragile, emotionally we're off balance. The amygdala, which is the fear engine in our emotional brain, is aroused, is heightened. Any small thing can just set us off, and we can be making impulsive decisions as well. So this part here, the negative emotionality, that we need to be alert for it when we're there. We need to recognize it when we're there, and also to be aware of certain triggers that will trigger us into this space of negative emotionality. Now let's have a look at what are some of these alerts that can push us, that we should be aware of, should be alerted of, that can push us into negative emotionality when shock happens. Now, the first thing is the ongoing state. What is the level of our emotional state? Now, a lot of it depends on who we are. Now, we have certain tendencies. Some of us are more precarious towards negative news, just like what we're hearing, for example, tonight in the evening news, the news will be talking about the sell-off, how much is wiped off in the equities, and what may happen in China, and what's and on and on. The media will keep going through on and on about what's been happening, the negative news, the whole night, and how we handle that, how our emotions are able to deal with that. A lot of it depends on who we are in terms of our own emotional state. Some people take longer to bounce back. Some people are easily affected by negative news, or some are easy which is easily anxious. They are more have a higher state of anxiety. The amygdala or fear engine is more aroused than usual, or they have a negative story loop in their brain that keeps telling themselves that you can't do it, you're going to lose all your money now, and you're going to work longer, and you're not going to have enough for your retirement. It's just a whole negative loop that one gets themselves into. Now, the other thing too is past losses that can keep you in a state that is bound by your negative emotions, particularly if you have had past losses or huge past losses. Sometimes you might think that you have suffered a large loss, but really sometimes it's what you think, and it may not be even the reality. In reality, the dollar amount of the loss may be not even as big as what you imagined, you thought, or you remember. So these are the issues that we need to be aware of, to be alert of your ongoing state, where you are at, who you are, and your past experiences can drag you to be at that state where you are negatively biased emotionally. And the next thing is to be alert of is your current state. For example, if you're busy at work, you've got deadlines due, you are worn out, you didn't sleep well, you're under pressure financially or job-wise or whatever it is, you need to be aware that your current state really it's putting you at a negative emotionality. Now, I had a question there. What do I mean by aroused amygdala? Amygdala, I've touched on it in my previous webinar before. Are you aware what amygdala is? This is an almond-shaped organ in our emotional brain. Amygdala is basically our fear engine in our emotional brain. So we've got three parts of our brain: the cognitive brain, the emotional brain, and the hindbrain. So the three parts of it. So a lot of our emotions are buried in the emotional brain. So amygdala at a neutral level, where you're healthy emotionally, it's normal. It's very small, like an almond-shaped size if we were to put your emotional brain under a brain scan. But if you are at a heightened level, which means you're aroused, your amygdala, it's already stimulated. That's another word for it, which means you get fearful, you get anxious, you get worried easier than normal. So you need to be aware of your normal state and your current state. And also one thing to be aware of, to be alert of, particularly for us traders, is your consecutive, if you have had consecutive losses, that is a big thing which drags on you, not just in terms of your emotions, but also your confidence. A lot of times where, for example, in a sell-off, and you try to go long, which means you're calling that sell-off has finished, recovery is near, and you try to go long. And perhaps you try it once, it didn't work, you cut loss, you try again, the market goes another step down, you get in again and try and go long again, and again, if the market hasn't recovered, it gone further down, and the third time you try, but each time you try and each time you're wrong, it drags you down lower and lower in terms of your emotions as well as your confidence, especially if you're getting back into the same position, the same strategy or same stock or whatever it is. It gets harder and harder to pick yourself back up, but all the more you need to do it. So these are the things that you need to be aware of, to be on alert of, and recognize them where you are at. The second thing that we need to recognize and be aware of is triggers. So there are certain triggers that brings you to negative emotionality or the shock, and it brings you spiral down in the emotional cycle. These triggers are like some old patterns, old news, old memories, old associations. For example, I'm just taking the sell-off in the equities market as an example because it is currently happening, and it might trigger certain memories in you. For example, you've seen a sell-off like that before and you experience losses. Like I said, sometimes losses is financially is not as big as the emotional impact of it. So it's not just a dollar amount, but it's the emotional impact that you felt, that you remembered. And the similar event like that can trigger a memory like that, and your brain sees the pattern. Sell off, losses, pain, depression, sadness, and it triggers a lot of the similar emotions in you, and then you start making association, the trades that you did or not did, and the negative loop stories come back to you, and then that's the time where you can jump into conclusions, make impulsive decisions, and be motivated by negative emotions in the decisions and the trades that you do. So you need to be aware these are triggers, old patterns, old news, old memories that can trigger you from shock to spiral down to the emotional cycle. Remember that what you remember, which is your memory, which is another part of our emotional brain, which is the hippocampus, which is basically the storage bank in our brain. What you remember may not be reality. We need to understand that. And also our brain, or hippocampus, the particular part of our emotional brain, has this ability to shuffle your memories. It's like your iTunes or music that you listen to on the app. It shuffles, so it may not happen in sequence as it actually happened, but it's what you remember, the sequence that you remember, and it can recreate certain memories, or it can insert certain memories. So what you remember may not be reality. The emotions that you feel brings memories back forward more, and it enhances what you remember more. So this is our memory, and how memories are saved, how we recall them, how they are stored, and that we need to understand how we cannot totally rely on what we remember. And the second trigger is new events. Things that we have not seen before or experienced before that can throw us off. We're not able to adjust or accept a new event. So being able to recognize these sort of triggers and alerts. So basically knowing your current state, where you're at, your emotional state, and what's happening to you in terms of your trading and your current state, whether you're worn out, you're pressured, you've been wrong consecutively. These are the times that you need to be alert, be on alert, and recognize certain triggers that you are either brought about through your memories or just through events that has happened to you before. So recognize them, be aware of them, because these can shock you and bring you down the emotional cycle that you need to short circuit. Now, the second thing about short-circuiting this emotional cycle is strategy number 2 is to reboot. Now, we need to reboot how we are thinking. We need to reboot our mindset, recalibrate your emotional state from a negative state back to neutrality. Now, we're saying is when we're at that negative state of emotions that can derail us, emotions. Now, what we need is to bring us back to at least neutral before moving back up to positive emotionality. There are 2 things that are very important in this rebooting strategy. Number 1 is your explanatory style and your thinking model. The explanatory style is basically when we experience losses, when we experience failures, how do you explain failures to yourself? And the thinking model is basically, for us as traders, how we think about losing. Okay, let's have a look deeper into that. Now, strategy number 2, rebooting. How do we reboot and push us back to a neutral level emotionally, in terms of emotionality? The best way to check is check and ask yourself, how are you talking to yourself when you are in that negative loop, when you are in shock, when you are in negative emotionality? Your explanatory style is very important. Now, this is a research that has done by Carol Dweck based on students. She basically split them up into students that are excellent in terms of their past academic results and students who are not so good or below average in their academic results. So the pessimistic group are students that are not as good, she found, generally speaking, in their academic results, because they found that when they do not do well in their exams, how they explained their failure to themselves actually caused them to be below average in their academic results. She says that those who have a pessimistic explanatory style tend to explain failures this way. They internalize it, and they said that the failure is stable and is systemic, is global. So internal, stable, global. So what he's saying is that it's me. You're internalizing the failure. I'm not good at it. I'm just bad at this thing, bad at trading, for example. And this failure is stable. I can't change it. It's my fate. It's my destiny. It's something that cannot be changed, and it's global, it's systemic. It's not just me. Everybody is suffering from it. There's no way I can change it. There's nothing I can do about it. There's no point in trying to change. So that's how a pessimistic explanatory style of failure talk to themselves. Now, on the other hand, an optimistic explanatory style kind of self-talk, it goes a bit like this. Failure is external. Is unforeseen. It's unstable, which means it can change. The failure that I have experienced today does not have to remain as a failure. I can change it. I can relearn. I can learn a new skill. And the failure that I've experienced is specific. It's specific to the current situation. It's not systemic. It does not mean that it's global. It is just in this particular situation. Losses can be turned around. Failures can be turned around, and I can learn lessons from it. And Carol Dweck says that people who explain and talk to themselves this way in an optimistic style has a better chance of bouncing back, has a better chance of talking themselves or short-circuiting themselves out of that emotional cycle of dragging themselves down into the negative emotionality. Now, another way of talking to yourself is to check yourself is whether you have this learned helplessness mode of talking to yourselves. This is derived, this model, learned helplessness mode of thinking was derived from observing how elephants are trained in the circles. If you remember or have seen elephants in circus, they tend to stay in one spot. Now, obviously, elephants are big, are huge, they're wild. How do you train them to stay in one spot? Now, the learned helplessness mode of thinking is how trainers train circus elephants in circus. They basically, when they're young, when they're still baby elephants, they tie one of the foot down to the ground. And because one of the foot is tied down to the ground, elephants from young, since baby, they think that I can only move in one spot. I can't run away. I can't do other tricks other than stay still in one spot. And over time, as they learn to be helpless, to think that they can only move on one spot, over time, as they grow, even when the chain is removed from their foot, you will find that elephants in circus do not pretty much move away from the spot. So basically, this is learned helplessness, which means they learned to be helpless. They learned that they can't move, they can't do anything, they can't learn new skill, they can't learn new things. And this is some of the mode of thinking that some of us are in, as in, I'm bad at numbers, sometimes you tell yourselves, or sometimes I've heard of this before, it is a sad story, but there are people who said that teachers, when they were growing up, tell them that they're hopeless. They can't do well academically, and because of things that either parents, teachers, or people with authority tell you when you're young. Hence, you think that I can only stay on one spot. I can't improve. I can't change. I'm bad at this, and that's all. I can. And it's the same with emotional learning, about how to deal with emotions. Learning emotional skills is something that we're not taught in school. Perhaps we're not taught in uni, or in whatever career that you have chosen to be in. It's something that we experience and we learn along the way. And some people might think that I'm a logical person. I need data, I need facts to support how I think and how I make decisions, and therefore all this emotional stuff, emotional intelligence, emotional brain, and how I feel, gut feeling, and all that, they're subjective, they're fluffy, and it's not something that I can learn from. But what I will say is, don't do an elephant. The learned helplessness mode of thinking will keep us in the same spot our whole life if we continue to talk to ourselves this way. So really, we need to reboot. We need to check how we're talking to ourselves, the explanatory style, how we explain to ourselves in failures, when we experience losses in trading, and check that if we have kept ourselves in the same spot. Now, the second thing that we need to be aware of in terms of rebooting is how you think. Check how you think. How are you thinking, particularly about losses? I know we all play to win and we want to win big, but the thing is, we need, as much as we plan to win, we need to plan to lose as well, though keeping it small. So win big, but lose small. That's how we need to think. And we need to think and understand and expect to have losses as we trade. It's a matter of probability. If you trade enough, and if you've been in the market long enough, you know that losses do come. And it does make you a better trader if you have the optimistic style of explaining to yourself, and you do not have that learned helplessness mode of thinking. So how you think and how you think about losses particularly is going to make a lot of difference in how you reboot, not just how you trade, but your emotions, how to bring yourself back up, reboot yourself, and to have that bounce back and to acceptance and to trading and making money again. Now, there's something that's very important when you start thinking about how you're trading is to think about your exit strategies and your loss limiting strategies, even before thinking about how you make money. These are the two foremost strategies that you need to think about. How will you be getting out of your positions? It's not about getting in, because if you don't get in, it won't lose you money. But if you're not thinking about how to get out, and that will lose you money. So exit strategy and loss limiting strategies are two of the paramount strategies that you need to think about and teach yourself how to think about managing losses and how you deal with losses that you should expect to happen as you trade. Now, another important way of thinking about losses is that to not focus on individual losses. You will see here that you will have many, many dots as you trade. Some are profits, some are these positive dots, and some are these negative dots that you will have in trading. But what you have to focus on is this trend line. Over the years, we're not talking about 1 month, 3 months, even a year trading. We're talking about a lifestyle of trading. 3 years, 5 years, 10 years, 20 years, 30 years is a lifestyle and a habit of investing properly, trading smartly. And this is the trend line that we want to develop, not these random dots that focuses our attention. Our attention should be focusing on the trend line itself, which is that gradually uptrend gradient kind of line that we want to achieve. Over time, the little dots that you think are so significant, they will be stretched out if we keep having thinking right and having the right strategies in managing losses. So focus on the upward trend and not each of the dots. So these are your comeback strategies. I'm going to finish up here. So the first thing is that we have this emotional cycle. There are shocks that can happen in lives, things that we do not happen, we did not expect, things that are imposed upon us, things that are violated us, committed against us, that will shock us. Now, this will continue to happen. So expect it, but recognize where you are at emotionally, because that will help you to deal with the shocks that we will get in life as well as in trading easier. And to keep you on this neutrality and upward on this positive emotion space is to short circuit out from that spiral down, as I showed you before, the denial, the anger, the bargaining stage, the depression. You can short circuit that, get out of it as quick as you can, reboot your thinking, reboot your emotion back to neutral, at least by checking your mindset, by checking how you're thinking about your trading, particularly when you experience losses, and then be ready to rehearse it over and over again. All these strategies about thinking, about how you manage your emotions, being on aware and alert of where you are emotionally, takes practice. So you need to rehearse recognition, rehearse rebooting, and then do it all over again, over and over again. So be ready to put these strategies in place. So I'm going to stop there. And if you have any questions, anything that comes up as I went through the strategies and the discussion with you, feel free to jump in with your questions. Any questions, anyone? Is this helpful for you? Yes, I am. I'm from Sydney. I live in Sydney. Are you from Sydney as well? Or Australia? Has anyone had a shock today in your trading? Budapest. Reminds me of the show Budapest. Great song and great show. Beautiful country. Yep, we'll continue to have surprises. So expect it. Yeah. Are you affected emotionally? How are you handling it? Mm-hmm. Okay. Has anyone tried the rebooting strategies that I mentioned before? Checking your mindset. Any experience to share? Any shocking experience? Or anyone has been able to get out of emotional tailspin? Okay, I think we're gonna call it a night very soon. So last call for any questions, anything you want to share. You feel free to if you want to chat. All right, I think we'll call it a night. So see you next time. Hope you guys don't get into the shock, but if you do, short circuit it and get yourself out of it real quick. All right, see you next time.